Good evening, everyone. Welcome to the Journey to Become Wealthy. My name is Kelvin Reed, and today we're going to be talking about Disney and the earnings. I know we mentioned that Disney would have an earnings today and that this thing could push up or down the market, very similar to Facebook, PayPal, Apple, a lot of the big dogs, and Google. So we just want to we're taking a look at it today. So before we get started, I want you guys to take a moment to like, subscribe to the channel. Make sure you hit the notification bell so that you get notified when I post videos. Alright, let's get started. All right, let's start with Disney, right? So Disney earnings. Disney posted their Q1 2022 earnings on today. And check it out, right? Their expected was 0.63 earnings per share, yet they reported 1.06. So this is 67% positive for the quarter for Q1 2022. And their revenue, they expected 20.96 billion, yet they reported 21.82 billion. 4.09% gains on the earnings for the revenue for the company. So this is major for Disney. I mean, even going through the pandemic, we seeing positive earnings. They beat this thing bad. You see what they did in Q4. They fell short. And Q3 and Q2, you see it was a struggle going back and forth. But to actually see them come through and knock it out of the park for the Q1 of 2022, that's showing a lot of positive momentum for the company going forward. And we know that Disney is getting more and more involved into different things like streaming services, movies, just really a lot of stuff. They're becoming one of the really big dogs. They are no longer just a theme park for many of us, especially, for the younger generations. And that's what we look forward to. We're looking forward to a company that is profitable going towards the future. So Disney is definitely a banger, and hopefully it pushes the entire market up going into the week, right? So let's check it out. Let's see what it did. This thing closed at 147. And I'm telling you, I was watching it. It closed. And I saw it come down. I was like, I see a lot of fear selling. And I was like, let me buy a piece of it. I started to buy a piece of it. But I was like, nah, I'm at work. As soon as I buy it, I'll be caught holding the bag. And sure enough, not long after the fact, look at this. This is 3 o'clock at market close. 3 o'clock Central Standard Time, guys. 3 o'clock Central Standard Time, 3:05. And then look at 3:10. This thing has shot up 8%, shot up $12, 8%. And we know that this isn't even the high for, the past month. But, well, it's pretty close. It's actually pretty close for the past month because this thing has cooled down quite a bit. And you see how earnings can really bring a company back to its value price. And look at that. For the past 3 months, Disney's been as high as 175. It's come all the way down to this 157. So it's actually still room to grow. One of the things I want to take a look at was I saw here is this Robinhood reports a fair value of $170. So imagine if I got it at that 157, I'm already beating the fair value price, right? According to Robinhood. Now you always got to do your own research because I showed you guys that. So according to Robinhood, fair value of 170, and it's high volatility, right? And they actually have it at a 69% buy right now, 31% hold. Now, nobody's saying sell it, so everybody's feeling pretty confident and pretty good, especially following their earnings. So let's check out what we would have come up with as far as a fair value price and what people have been buying it at as of recently, right? Because again, these things change, right? With the market, we know that the market's been coming down. Therefore, a lot of the prices that we thought were good buy prices are actually changing now. So what we like to check is our 100-day moving average, our 200-day moving average, and our RSI for the company. So current RSI is 52, which means it's right outside of our range of 30 to 50. But if you'd have called it earlier when it had dropped, it'd probably been right in that 50 range, right? Right at 147, 145. The RSI probably would have been right. And actually, this isn't even including after hours, I don't believe, the RSI. And we see our 100-day moving average. Our 100-day moving average, 158. People were willing to spend $158 per share in the past 100 days. They were willing to spend $168 per share in the past 200 days. Again, getting it at 147. It's currently sitting at 158 due to after hours. But if I'd have got it at that 147 before market closed, I got this thing undervalued. I got this thing at a really good price. Many people have been willing to pay for it. They've been averaging down into it for this reason alone. And then now they reported good earnings. You can expect to see even more buying pressure going into tomorrow. So let's see what our stock price prediction is, right? Disney stock prediction. Let's see what we got for the stock prediction. Right, you guys know I like to use CNN, but you guys can use different things like Tip Ranks or any other company that you feel like provides a good stock price forecast. So on the low side, it predicted $126, 14% drop, and that's again from the closing price, not from the after hours price of $160. It has a median range of $196, means we couldn't gain 33%. A high of $220 means we can gain up to 50%, but this is all within the next 12 months. All within the next 12 months. So Disney would have definitely been a good company to get in, because again, somebody asked me about it today, so I feel like we needed to review it. Disney would have been a good company to get into before earnings. I was hesitant, not knowing how things may fare. Again, struggling with the pandemic thing, all the different variants, businesses slowing down, and all the different news. I was cautious about getting in. I could have even got in still before it shot up. I looked at it. I watched it move. And I started to set a buy point on the way, just saying, hey, this thing goes up, put me in here, get me set up. But again, just being at work and wanting to be cautious, because I want to be able to get in, get up, get out if possible. But I just left it alone to watch it, because even now at this range, according to what we just looked at, it's still in about a fair value range. And seeing how much the stock market actually ran up on today, the markets did pretty good on today. Seeing how much the markets actually ran up today, I see us cooling off again pretty soon. I think we need another day to cool off. So if you guys watched my video from yesterday, I posted, hey, is crypto cooling off? And you guys know a cool off is usually just the moment right before things start to retrace and go even further to the moon. So it looks like the stock market may be looking to cool off, maybe tomorrow, maybe. So that things may come down a little bit, and hopefully we set up for that retracement where things start to shoot back out to the moon. So now that we're done with the Disney review, let's check out the markets. The S&P 500 is up 1.46%, all right, up 1.46%. And now we know the past month that the S&P 500 was in correction territory, meaning it was down 10%. So let's see where it's come from in this past month, right? We were down 7% here. Now we're currently only down 1.83% for the month. And I'm going to go as far as the 3-month trend, right? We were down 7% here at the low point. And again, we're still only down about 2% for the past 3 months. So we are slowly recovering, right? You guys see this. You see this big jump up. We are recovering. Is the bear market over? That is a question we definitely need to be looking out for, right? That's something we want to be looking out for. We may be looking at, this is our opportunity to be buying. We may be missing our opportunity, right? Again, I told you guys, the opportunity to buy low, sell high. We may be missing that opportunity. It may be passing us by right now. So let's check out the Dow. The Dow is currently up 0.88% for the day. Currently up 0.88% for the day. So it came down as low as 5% for the past month, and we've made that back, and now we're only down 1% again. Another company only down 1%. You guys know the big dogs, right? The big ones that's really gonna matter. The Nasdaq and the Russell 2000. Those ones, they had come down almost 16%, 14%, 16 between 14 and 16% between the two of them each. So let's see how much they recover, right? I'm gonna pull up the 3-month chart. So here we saw the Nasdaq down 16.45%. It came back up, and currently it is only down 9.34%. We are actually just tipping out of that correction territory for the Nasdaq. Is it over? Is it over, guys? What do you guys think? We're looking at this. Tell me, let me know in the comments. Is the correction over? Is the crash over? Is the market crash over? Have things been priced in? The Fed rate hikes, earnings, all of the inflation news, has all of that been priced in already? And only in the month of February, did the market overreact? And are we seeing things return back to where they really should be? So the market overreacted, and now it took us 30 days to actually recover. We have a stronger market than normal. What do you guys think? What do you guys think is going on? Finally, let's check out the Russell, right? Again, another one we saw get beat down, right? So let me see if I can find the Russell 2000. I want to pull it up on a bigger chart, right? I like to see it on a bigger chart because I want to see that 3-month span. So we got a month. I think this right here is the point where we were down almost 14%. As of right now, we're only down 2.56% for the month. As you guys see, I don't have a 3-month chart, but we'll pull up the 6-month, right? On the 6-month, we were down, again, 14% right here. Looks like we made it back about up to 6.96%. We are out of this correction territory. Is it over? That is the major question. Is it over? And the only way to find that out, we're going to have to keep watching this thing for a couple of days. We're going to have to watch it. We're going to see how things move. And hopefully we start to see green days. I mean, stuff going to the moon, longer green days, longer green weeks, and really just some great upward momentum. You guys know some of the things I'm looking into. I'm still going to be holding my financials because they should be getting even stronger after the Fed rate hikes. You know, after we see the first one, we should see some more buying pressure as far as financials. And you guys know the financial plays, right? That is, let's go to it. Let's check it out, right? Stocks. We have Goldman Sachs. We have Morgan Stanley. We have Wells Fargo. We have Bank of America. We have Apple, right? Those are really our top dogs. And we picking between these. So we're not buying all of them. We picking between them. So either Goldman Sachs or Morgan Stanley, which Morgan Stanley seems to have been doing better than Goldman Sachs as of recently. We have Wells Fargo and Bank of America, with Wells Fargo pulling ahead in the lead as far as how it's performing. And we have Apple or Tesla or any of these other big dogs, right? I think PayPal, we're kind of checking out the list after their terrible earnings. We know that I'm in there, I'm holding, and that's fine for me, but you guys kind of stay away from it. SoFi has earnings in March. That is the news, I believe, that's going to push this thing up and out going into March. The rumor in the news, right? People are trying to see how are they going to perform now that they have a bank charter. What is their earnings going to look like? If they have a good earnings, this thing has potential to run to $20, I believe. And again, that's just me, right? I could be wrong. I think it has a lot of strong potential, especially as a long-term company if they keep doing what they're supposed to do. They provide good earnings on March 1st. Everything's going to be fine. And that's going to be great for them. So if you guys look here, of course, I want to stick with the routine. Make sure I give you guys a good overview so that you know what we have for today, right? We see the entire market actually hanging out. It's doing good, right? The technology sector up in green. So we got Microsoft up 2.18%, Apple up 0.83%. In the financials, we got JP Morgan up 0.42%, Wells Fargo up 0.53%, Bank of America up down 0.20%. Again, like I told you guys, Wells Fargo seems to be the one outperforming. Even PayPal finally made some more upward momentum. And I believe it's actually up more than this 2% on the day, but still it has not given us the returns on the large 20% drop that it had on last week after earnings. Communications services. Google. You guys, I think Google is going to be a big dog. I think Google is going to be a big dog, even bigger. It's came down. I'm not trying to get a full share, but I'm thinking about definitely buying some fractional shares of Google and dollar cost averaging over every other week when I get paid, right? I'm thinking about adding $100 into Google, dollar cost averaging every other week when I get paid. When I add money, I think that's what I'm going to do. And that's going to slowly build my position, right? That is what I'm thinking about, because I don't want to be left when they do their stock split if this thing just goes to the moon, right? So that's what I'm thinking. That's what I think. That's how I think I'm going to attack this. I think I want a piece of Google. I have not added it to my list for everyone else. But I think that's just what I'm going to be doing, right? That's just how I feel about it. Healthcare, Pfizer steady coming back down. Johnson & Johnson only down a little bit, but flat, pretty flat. Moderna finally making some returns, but some pretty good returns, but they lost a lot last week. Consumer cyclical, Amazon down pretty flat, 0.14%. Baba actually up 3.77%, finally running. JD.com running again. So we seem to see between these two Chinese companies, the mini Amazons in my opinion, they both seem to come down before they run back up, and they stand in this range, right? The one for Baba, I want to say 117, to 130 range. And for JD.com, I want to say $70 to $80 range, just staying between there. And it has yet to break their resistance. And I want to say about 3 weeks, I've been kind of keeping my eyes on it and watching them. Now, again, I'm being very careful with foreign companies because you never know what might happen. Any foreign policies, it's hard enough to keeping up with all the U.S. policies and things going on. So I'm just trying to, let you guys know how that goes. Tesla up 1% on the day. Now, I actually think it has some movement in the after hours. Energy moving back up. We looks like ExxonMobil was the only company that experienced some downward pressure, down 1.57%. Consumer defensive. Walmart kind of seems like it's been kind of taking a beating, a small beating day over day, down 0.22%. Nothing major, but especially if you're looking to hold for the long term. Costco is down, up 1.47%. Target is up 1.73%. And we have real estate right here that's actually showing to be pretty green all around, right? Pretty green. So for those of you who's in the real estate, you're looking for the entire market's green. We see this thing moving up. But when the entire market's red, it pretty much hangs out flat. So it may be one of those safer plays for those of you who are considering getting into it. Utilities look flat. Base materials look pretty green, pretty much reflecting the rest of the market. So hopefully you guys have been investing in some of these things. And before we go, let's get into crypto, right? Let's check out crypto heat map. Bitcoin, it is still up 0.88%. Doge up 0.92%. SHIB up 3.73%. It continues to run. We just talked about this last night. Is it going to keep running or is it going to come back down? We saw it cooling off just a little bit, and this joker retraced and went back up. Bitcoin being a bigger dog, it seems to be cooling back down. Ethereum, though, you guys know I'm aiming more towards Ethereum, up 3.51% for today. Crow up 5.87%. Mana actually coming down a little bit, down 3.16%, and Sand down 0.55%. So those two are down just a little bit, but hopefully if you got in there early like I did, you're up in pretty much everything. You're up in everything. I want to say the only thing I'm probably down in right now is Terra Luna, and that's because I have not averaged down in here yet. I'm pretty much holding what I have, and I think I have a $78 average. I'm holding what I have, and that's just because I bought it just out of something looking for something to play for, right? I saw it moving a lot. It had a lot of volatility behind it, and I wanted to see how it was going to move. I may choose to average down now because it's been hanging out in this $55 range for quite some time. And that's just an update on that. So it's been hanging out in there. But let's go see, right? What are these things doing as far as on the week? Bitcoin up 18%. Ethereum up 18% on the week. And they pretty much matching, right? They matching eye for eye right now. I love to see that. Cardano up 13%. Solana up 11% for the week. Terra Luna up 16% for the week. Shiba Inu, the one that's really running, 50%, 56% for the week, y'all. And let's not forget, every day goes forward. We dropping a day. So 56% for the week is major. Major. We see Crow up 28%, 28.22%. And let's check out Decentraland and Sandbox before we close it out. So Mana up 31%. It is beating it down, right? Beating it down. And Sandbox up 28.33%. Again, killing it, knocking it out of the park. So right now we see the stock market and the crypto market booming like it hasn't before. Just really going crazy and running up. Hopefully you guys were taking advantage of those dips, those buying opportunities. Is the correction over? We do not know, but we are getting out of the correction territory. It looks like most of the indexes and sectors are no longer in the correction territories, and we're seeing some brighter days ahead. Maybe it's the sunshine after the rain. Who knows? We have a few more days this week to kind of check things out, and I really would like to monitor the rest of the month of February, especially going into March with the Fed rate hikes approaching. So it's just so much news and so much going on. We have to be careful and we have to be aware of what's going around. This is the perfect time though to be making those swing trades, building out your portfolio. Hey, you see it down, you buy the dip, make you 10 to 20%. You take some profits out, invest again, and it's just a constant cycle, right? You buy low, sell high, reinvest. Buy low, sell high, reinvest. So that's what I got for you guys. Thank you guys for joining me tonight on the journey to become wealthy. I hope you guys have a good night.